How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be talking about and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade right now, heading into the first official trading week of March in 2020. And like you all read in the title, oh man, the futures, they gap down yet again. This market is looking very red heading into the beginning of the week. So I want to share with you all what my thoughts are for this week. Is it going to be volatile? Am I buying stocks? Am I selling stocks? Do I think it's going to close green, the market this week, red? And in general, I want to show you all what the markets did in terms of the S&P here over the past 5 days of trading, so you can understand kind of the condition, the sentiment of the current market that we're in. So if you guys enjoyed this video, before we get started, all I ask from you is to go down below for me and hit that like button, and also consider subscribing to the channel and join our Strive Smart Discord group chat and our Strive Smart Facebook group, 100% free of charge. Those are linked down below in the description box. So let's start off here with the SPX, the 500 largest publicly traded U.S. companies. And right off the bat, you can see in these past 10 calendar days, roughly 10 calendar days, the S&P has gone down from nearly $3,400 down to about $2,870. And this is something that I've highlighted over the past couple of videos as being a flash crash. This happened again in under 10 calendar days, not trading days, 10 calendar days. So this is massive panic selling right now. And if you guys take a look at the 5-day, 5-minute chart, actually, no, let's take a look at the 10-day chart so you can see that this happened in 1, 2, 3, 4, 5, 6, 7 trading days. We were down 15% on the S&P 500. So in these past 5 days alone, the S&P's gone from 32.59 down to about 28.55, which marks a sell-off of around 12%. And if you guys have been paying attention, this is the worst week in terms of performance for the stock market since the great financial crisis back in 2008. So needless to say, this CV, the global outbreak, and the potential for the United States to be infected widely, which is still up in the air now. This could happen where a lot of people get infected here. That's having a big damper on the markets right now. So let's go over to the futures to see what is going on here. The S&P 500 futures /ES, and by the way, the futures market, it opens up every Sunday at 6 p.m. Eastern Standard Time, so you can see kind of what the markets are trading at in terms of, S&P, gold, NASDAQ, Dow, crude oil, silver, the list goes on, right? So the ES right now, the S&P is down about 1.3%, down about $40. So it completely erased what the market ran up at towards the end of the market on Friday. So if you guys were paying attention, we saw a massive push in the market. The S&P went from 2880 up to around 2950 in the span of the last 30 minutes of the market. So the fact that we're down about 40 points, we didn't erase all of that gain, right? But we did erase a big chunk of it. So overall, this is an interesting pattern that I'm seeing here. We're gapping down, but we're holding at the same time this little uptrend that was formed ever since around 10:30 a.m. on the 28th of February here on the ES. So this is something that I'm going to be watching heading into the morning. Are we going to maybe fill this gap back up to where we were before the gap down here on the futures? Which, honestly, if that happens, we could get a lot of day trades here in some of these large cap stocks that I'm sure if the futures hold this way, they'll gap down in the morning, and then if we gap up in terms of the futures, like what's happening right now, literally as I'm speaking, we could get that day trade in these large cap stocks. So keep an eye on this, guys. Do we gap up, fill the gap, or do we break this little uptrend that we are seeing here on the intraday chart? If so, that could be really the trigger for more selling here. So S&P's at 25 bucks, and as I'm recording again, you're seeing this is actually filling the gap as we're speaking. So quite interesting. The Nasdaq right now down about 80 points, but we got down all the way to around 82.50 when this future market opened. I think we were down around 200 points. So this is filling the gap as we're speaking, like with the S&P 500. The Dow Jones right now down about 260, down about 1%. So for me, this is huge because into the session tomorrow, I'm going to be looking at what the futures are doing to kind of predict what we could open at in tomorrow's session. And the futures, they really help you out for the upcoming session, but I'm not relying too heavy on them for, let's say, a couple days out due to the volatility in the market, and really anything can change in the snap of a finger, especially with the CV. And one more note around the CV and maybe what is actually selling this market off. We got, unfortunately, the first death in the United States. And that was, I believe, correct me if I'm wrong, over in Washington. And the total number of cases right now from the last time I checked, we're at around 70. So keep an eye on those numbers. Keep an eye on everything around that, of course, because that's really what's moving this market right now at the end of the day. And keep an eye on the Fed. Maybe the Fed tries to come in, rescue this market with a rate cut. That is also possible. So enough of the overall market talk. Let's get into what I'm watching heading into this week. So this is my watch list, guys, and you can take a look at it. You can screenshot it. You can create your own watch list with similar stocks, whatever you want. But this is what really I'm keeping an eye out on in terms of individual stocks. Now, under this is what I'm going to be intraday trading for the most part during the volatility in this week. Let's start off with SQQQ and TQQQ. I know I talk about these a lot on this channel, and rightfully so, because they make a lot of people money in the volatility, right? SQQQ is an ETF that goes up whenever the Nasdaq, is going down in price. So this is a way you can make money when the markets are going down, plain and simple, by just simply playing SQQQ. And on the flip side, TQQQ is the inverse to SQQQ, and it follows the NASDAQ, meaning it goes up whenever the NASDAQ is going up at a 3x rate. So I'm not going to go too in-depth into these market ETFs. Do research for yourself, of course. Another one is going to be TVIX. I love trading this during the volatility. This trades based upon, it's an ETN that trades based upon the VIX, right? VIX, this is also known as the fear index, the fear indicator, whatever. And this goes up drastically whenever the markets are unsettled, kind of, what's the word? There's a lot of fear in the market, uncertainty, that's the word. The VIX goes up, and when the markets just tank in general, the VIX is going up for the most part, and that's what's causing TVIX to see these massive intraday opportunities. And mind you, if you're a beginner, I say this a lot, but if you're a beginner, be careful with this. Be careful with this. This is one of the instruments, one of these ETNs that if you are in it, make sure if you're right, if you've chosen the correct direction, try to get in and out quick. Lock in that profit. Don't try and hold it too long, get too greedy, because take a look at what happened in the last 30 minutes of the market. Let's say someone here bought it at 120. They got greedy, didn't sell out for that quick little profit up to 123. They would have gotten smoked because this thing went from 123 down to 95 in the snap of a finger in the matter of around literally 20 to 30 minutes. So for me, with TVIX and quite frankly, any of these market ETFs, the goal is get in, get out. And honestly, TVIX is, I'd say, a lot riskier than even SQQQ, TQQQ, or SPXS, SPXL, which are ETFs that trade on the S&P, but they're all risky at the end of the day, guys. And get in, get out, and when you're wrong, this is key. When you're wrong, don't lie to yourself. Cut your losses quick because, again, you can get crushed if you get caught in some sort of move like this. And if you're a beginner, set a stop loss. For sure, set a stop loss. More advanced people, more intermediate people, they have a thing called a mental stop loss where if you're not disciplined, guys, don't even try and do this, but a mental stop loss would be if, let's say I got in at 120 and I'm like, anything under 118, I'm cutting no matter what. It dumps under 118, I'm disciplined, and I would cut losses with the mental stop loss, right? That's kind of how that works. But again, if you're a beginner, I would not do that because your emotions might take advantage of you and be like, oh, don't sell, it's going to come back, blah, blah, blah. But then again, you might get smoked doing that. So overall, those are some market ETFs that I'm watching heading into this week. Now, if we're talking about individual stocks, with this massive sell-off in the futures, not really massive, but it's not massive compared to what we've seen in the market, but still, it kind of is a nice little chunk to the downside. We're going to see a bunch of stocks selling off even further this week if this maintains, right? And one of the main ones I'm watching here is Shopify, ticker symbol SHOP. And this is one that nearly hit $600 per share, guys. And this is one in general over the past couple of months. I swing traded it in and out a lot, made some good money on it, but kind of let it slip my watch list ever since it cracked into the 400s, right? And again, it made that massive run up to 600. Now we're seeing a pull down into the lower 400s. And again, if this market maintains red into tomorrow, we could get back into the low 400s, which could offer a lot of potential here due to it being around, if we're seeing from that top point, it's around a 20% sell-off to where, we could end up finding some support tomorrow at around $440, maybe $420. So Shopify is one for sure I'm watching. Square, ticker symbol SQ, they reported earnings this past week. They're growing very, very beautifully. They beat EPS by, I think, 2 cents, but that's not why the stock cracked up so much. I think it was because, I forget exactly, but in general, they're just growing quite nicely. The stock was up 5% on Friday. And this is one in general that seems like it's been holding up ever since the market has been tanking. And for me, when I'm looking at stocks, I'm trying to see which ones in general are holding up when the markets are falling. So maybe I can intraday trade those or even swing trade them through the volatility, although that is a bit more risky because even stocks that are holding up sometimes, they can get squashed when the markets in whole are falling, which again, that is a bit risky. It leads to me being a bit skeptical with swing trading, but you all know I am in Microsoft, which is a pretty hefty swing trade for me right now, which I do plan on adding more to. And while we're on the topic of Microsoft, let's take a look at it, guys. Ticker symbol MSFT. This is one that topped at 191 back on the 11th of February, and since then, it has shed about $40 off the share price. That is a 20% drop in Microsoft. And technically speaking here, anything under 20% is a bear market, right? Whether it's for an individual stock or the market in general. And Microsoft at this point is not down 20%. It's down about, I'd say, 15% from the top, not even, about 14% from the top, which in my eyes still offers a lot of value. And this is one that was up 2.4% on Friday, despite the markets being red for a lot of the day. And in general, guys, this is one that you have to, in my opinion at least, you don't have to do anything, but it's definitely wise to consider taking a position in a massive conglomerate company that sees a sell-off and that rarely sees sell-offs of this magnitude. So for me, I added it in my M1 Finance portfolio. I'm looking to add more, especially if it drops, and I'm swing trading it in my swing trading account. So another one is going to be SPCE. This is one that was up 12% on Friday, up $2.63. And in general, we were able to hold that 180 SMA support here on the 4-hour chart. In general, we held around $20.50 as well, which was an older resistance. We held it as a new support. So for me, this is looking quite bullish if we're looking strictly at the technicals, right? You can see, on this 5-minute chart, and even on the 10-day chart, we're slowly breaking out of moving average resistances, which is one of the first signs that I look at for a reversal in any stock, in any ETF, any ETN, and in any index at that matter as well. So another one I'm watching is NVDA, NVIDIA. This one was up $17 on Friday, up 6.92%. And just like SPCE, this one's slowly breaking out of its downtrend. I know the markets are red. It might drag the markets might drag NVIDIA down tomorrow, but this is looking quite bullish. Simply the price action that we saw on Friday, right? We can see we had a massive leg up from 240 to 270. We consolidated a bit. Then we saw another pop, another bullish move heading into the close, leading us to close above 270, which is extremely bullish. So if this ends up holding up, again, there are stocks, guys, despite the market selling off, there are stocks that hold up whenever the market, even when the markets are selling off. If this holds 270 tomorrow, we could see a nice day trade from 270 maybe to 280, maybe to 285. That's kind of what I'm keeping my eyes on here for NVIDIA. So Netflix is one of those companies that hasn't really seen a sell-off, believe it or not. And you can argue that this is the best, CV-prone company. Literally, you're at home watching Netflix and chill, right? You're not going out. You're not really associating with people. You're not in the risk of catching the CV, right? So Netflix really isn't affected, right? It's not affected because, again, people are staying home watching Netflix, so they're not. It makes sense at the end of the day. This was only down 0.72%. It's at $370 right now, and it's only down about a couple percentage points ever since this whole CV scare over the past, I'd say, 14 days. And back to Shopify, it's kind of a similar business in a way, because not a similar business, but a similar situation as Netflix, because Shopify, people are using their platform to sell products via e-commerce, of course. A lot of those businesses are ran from home offices, maybe from places where you're not interacting with many others. So this could be a company that really can push through, which is why, again, I am watching it as of right now. So some stocks, I've been getting a bunch of questions on the cruise line stocks. Am I looking to invest in them? No, it's really not my niche that I'm really an expert at, that I know a lot in. And for me, I don't like investing in companies that I don't really know a good amount about, right? So for CCL, for me, I'm not really looking at it as an investment, but maybe a bounce back play. Maybe a bounce back trade, but then again, the CV scares me a lot, to the point where I don't want to touch companies that are severely prone to going down due to these scares, like the cruise lines. We've seen airlines get crushed. Let's go through some airlines so you guys can get an understanding of how badly they've been getting crushed. Literally, DAL Delta went from $60 about 2 weeks ago, down to $45 per share in the matter of 14 days. Another one, American Airlines, AAL, $30.75 just 2 weeks ago. This is insane. Down to about $18. So their stock got cut 50%. This is insane. Warren Buffett is a big owner of the airlines. He's getting crushed right now. I would love to know, honestly, if he's buying more, because we all know, he buys more when there's weakness, especially in businesses that he already owns and believes in for the long term, which I know he believes in airlines because I'm an avid follower of Warren Buffett. So let's get through some other ones very quickly, a speed round to see kind of what went down on Friday. Johnson & Johnson has been taking a hit. This thing's down 3.3% as of Friday, down almost $5. I'm actually buying more in my M1 Finance portfolio here. MA MasterCard, this was up 1.55%, up $4.43. And this is one similar to Microsoft where it doesn't experience too many sell-offs, and every sell-off of this magnitude, again, of around 15-20% that we've seen in recent history, it's proven to be a dip buy. So for MA, I'm for sure watching it. It's attractive to me. And if I were to pick 3 stocks right now to just buy and swing trade for the next couple of months, honestly, it's going to be MA. Of course, Microsoft, as I'm already in it. And the third one, I might just go with a riskier play being Shopify. I'll be honest. Ticker symbol SHOP. Those are the 3 that I would pick at this point. Apple maybe, but that's prone to China too much. They have 20% of their sales coming from China last time I checked, right? And with the whole outbreak, supply chain, they produce a lot of their products over there in China. I would stay away from this one because if it gets to maybe, I wouldn't stay away from it if we were to see a reversal in the market in general. I think Apple would bounce back, but there's still risk. And let's say if we were to get to 220, maybe 230, 240, that's where I'd consider just picking up some shares for a swing, because I would see a little bit of value down there in Apple, to be completely honest with you all. So last thing, let's see what gold is at right now. /GC gold is up about 1%. Okay, up about $14 right now, seeing a bit of a recovery. So for tomorrow, JNUG could be a play, which is a 3x leveraged ETF that, oh my goodness, this thing was down 30% on Friday. Wow, I didn't even see that. So okay, maybe we get a bounce back play in JNUG. Does that mean GDX must have gotten destroyed? GDX was down 7%. Okay, so that makes sense. So for tomorrow, for sure, I'm watching JNUG for a bounce back, GDX. I'm watching gold in general, and of course, all of those market ETFs and stocks that we just went over. So if you guys enjoyed this video, I hope you all did. Go down below, hit that like button for me, and consider subscribing to the channel if you haven't done so already. And don't forget to join the Strive Smart Discord group chat and the Strive Smart Facebook group. And you can claim 2 free stocks as well from Webull, valued up to $1,400 with a $100 deposit using my affiliate link down below in the description box. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.